Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, if you were hoping that with oil prices falling more than 30% in the past 3 months, it will, punch a smaller hole in your budget going ahead, it's time to think again. Well, the OPEC had a very important meeting yesterday and they have Santo decided to cut oil production, overall oil production among their members at least, to up to $2 million barrels per day. Well, if the net effect, if you look at the net effect, the net effect will turn out to be about 1 million barrels per day. Now, this is probably the biggest cut that OPEC has undertaken since 2019, if I'm not wrong. I think the last big cut was back in the pre-pandemic days, and clearly global oil prices have spurt up in reaction to this. If you look at the past few days reaction in leading up to the meeting on Wednesday, clearly oil prices have gone from anywhere around $83 to $84 per barrel to around $93, $94 per barrel. So we have already seen an almost 10% rally in oil prices. Now, well, as an Indian consumer, that always gets you a little jittery, right? Because we are a net importer of oil. Anytime oil prices rises, the concerns about inflation, what will it do to the fiscal budget, and those sort of issues. Recently, of course, the point of view was, Santo, that because we were buying so much of Russian oil, which we are getting at almost 40% discount to the market price, probably, higher crude oil price internationally is not that much of a concern. But I was going through a data point recently, Santo, and it showed that in the past 6 months, the oil that we have bought from Russia, it's almost 20% of our total imports. It has only given us an improvement of about 3 to 4% in our overall, average basket of crude oil that we own, that we have here. So clearly, even buying at 40% discount has not really helped us in terms of lowering our oil bill. And that is where my concern is right now, Santo, that going ahead with crude oil prices probably trying to go back to the $100, maybe $110 per barrel mark, this could again create issues around inflation. Recently, the RBI's commentary came in and they suggested that inflation probably will moderate to around 6% average in the second half of FY23 and then head towards 5% mark in the first quarter of FY24. But with this sort of a change happening, Santo, I think inflation again could be a big talking point.
Well, I'm not so sure about that, CJ, for one simple reason. Just look at just look at the pump prices in India for the last 3 months now. It hasn't really moved. It's almost like it doesn't make any difference whether oil is at $120 per barrel or it's at $80 per barrel. We are neither getting much advantage when the prices are falling, and I think above a certain point, to some extent, I think this time the government has kind of intervened. But the flip side is that we are not getting any advantage when prices have now actually come up. That's one part of it. Now, the second is that till some time back, there was a risk that higher oil prices could seriously dent global growth. Now, it seems to be the reverse case. It's because global growth is falling that you're seeing a sharp slide in oil prices. So that effect seems to have taken place. And lastly, even when OPEC introduces cuts, there's always a lack of discipline. Not all members always fall in line, and this has been a regular problem with OPEC, not just now, but for some time now. Now, things are only going to get even more dire in some ways because the sanctions on Russia are going to get tighter. So supply position will still shrink further, and that's a big concern. And that's when the discipline within OPEC will be really tested, I would say.
I think, Santo, more than a supply issue, I think the oil so far, the oil market, the past 1.5 years, or at least in the past 6 months since the Russia-Ukraine war, I think it has become more of a supply chain issue than supply issue. I mean, even look at India, for example. Even though we want to buy crude oil from Russia, the tanker rates are so high that if you account for that, then actually you're buying at
much
a more expensive rate.
Goes away.
So therefore, even though there is a market available, because of the logistical issues that have been created because of the ongoing war in Europe, it really is not giving any sort of benefit for those who are trying to tap a market like Russia. And also, I think going ahead, this is, as you mentioned, is going to only get worse because the sanctions on Russia are only going to get stricter and stricter going ahead. There is already a shortage of oil. The only other thing that I want to watch out for, Santo, is the comeback of China probably in 2023. 2022 has been a washout for Chinese economy and Chinese consumer. But with probably COVID policies being relaxed going ahead, I think you will get a big clue of at the national conference of the Communist Party in next week, whether probably there is a relaxation in the zero COVID policy of China. But with COVID probably relaxing a little bit, I think China could come back, roaring back next year. And that could be a good trigger for demand. We already know the Indian economy is expected to do well. So I think India and China, world's second and third largest consumer of oil, going well, I think could offset any sort of slowdown that might happen in US, and that is why I believe probably oil prices will remain
China
firm.
calls for a separate debate altogether, CJ, and at this point the news coming out of China is not all that good. There's an interesting article in the Financial Times where they have flagged off the worsening situation in the real estate sector, which will obviously have implications across the economy. And last point about OPEC I would like to make is that, at this point, by cutting back on supply and pushing prices higher, the OPEC clearly is not helping its own cause. It will only accelerate the shift towards renewables. There is a certain price point at which I guess people would be okay with fossil fuels, but the higher the price becomes, I think the greater will be the urgency to move towards renewables.
Yeah, also Santo, the lack of investment as well. I mean, if you look at which company would want to invest billions of dollars in, drilling a new oil field when they know that probably in 10 years time, 15 years time, that oil field is likely to be redundant. So it's sort of a quagmire for for a consumer, because at one point of time that you're still not going to end consuming oil, but nobody is investing in new oil production. Therefore, oil prices are likely to remain in this $80 to $120 range going ahead. And we will have to wait and see. I mean, Citi said that the implication of this oil cut will probably be felt in another couple of months or 3-4 months, and only then we can actually see what sort of impact it will have on prices going ahead.
Well, with that, let's head into the market setup. Looks like a positive start, CJ.
Yeah, it is absolutely, Santo. Although we are trying to catch up with Wall Street and the rest of the global markets because of the trading holiday yesterday. But clearly, if you look at the net effect of the 2 days trading in Wall Street on Tuesday evening as well as yesterday, Santo, I think we are looking at almost a 80 to 100 point gap up opening for the Nifty going ahead. If you look at the cues from Wall Street was at one point of time, Santo, down almost 2.5–3% yesterday, but it really recovered very sharply towards the end of the day, and I think that is something that will give the bulls a lot of hope. Apart from that, the only concerning bit, Santo, is the jump in US 10-year yields that we have seen. Almost a 12 basis point jump yesterday, now back around the 3.75% level, and that could be a little bit of a dampener for emerging markets.
Well, if you look at the slightly longer term trend in US markets for the last quite many weeks now, it's very clear that sentiment is very jittery. But yes, if you were to look at Indian markets for now, I think the updates that we are seeing for the second quarter so far from most leading companies, they've been pretty good. And so I think that could at best cushion the downside in the market. But remember, if the global markets are not doing well, you can't think of any
I think
upside.
banking names I think have to be the front runners going ahead and leading the bull party into the December and January month. That said, let's quickly move on to some of the stocks that we feel could be buzzing in trade today. Starting off at Santo.
Bharat Forge, now very strong numbers for in terms of Class 8 truck sales, record numbers in fact.
But best September ever.
Best September ever for the company. Now, it's slightly strange here, CJ. If you look at the overall price performance of the stock since the start of this year, it's been a laggard. The numbers have been quite decent, yet the market somehow doesn't seem to be convinced. And perhaps there's a good reason also. The kind of numbers that you've seen in September, at least the price action seems to be indicating that market is not convinced that these numbers can be sustained, given that both US and the EU economies are in the midst of a slowdown. So that is obviously the biggest concern, considering that 25% of Bharat Forge revenues come from this particular segment. So there is concern there. And while some of its nascent units might be doing well for the time being, since the main segment could be under pressure, that's why I think the stock could underperform for some more time.
Ms. Santo, I think today probably we could see a little bit of short covering. I think because the Class 8 truck sales numbers that have emerged out of North America for September I think would probably take the market by surprise. The reason the stock was not performing was because of fears of a recession in the US, the already ongoing recession in European Union. So clearly with that sort of a setup, with this sort of a number coming out, a surprisingly good number coming out, I think we could see some bit of short covering there. Also going ahead, I think, Santo, the focus of the market will be less and less on the the auto component side of the business for Bharat Forge. I think the focus will probably largely move towards defense space, where the company is trying to make very big strides. It's trying to make big strides in that market, and is very, very confident that the defense exposure to revenues could rise significantly going ahead. And I think valuation also of the company will largely be determined by what happens in the defense space rather than what is happening in the auto component space. Well, my first stock today would be Zee Entertainment. Well, the big approval from Competition Commission of India came out yesterday, Santo, for their impending merger with Sony India. Now, CCI's approval was, of course, the biggest hurdle that market was, awaiting. A lot of people had thought that it will take still a lot of time for that approval to come through. So, the coming of the approval so soon after the NCLAT approval, NCLT approval, is actually a big positive. Though there are a bit of a caveat, small caveats in the approval that the CCI has given, but in general, I think this is a big positive. Apart from that, if you look at Zee Entertainment's earnings itself, the expectation is the second half would be quite strong for the company, especially because of the revival in advertisement sales. Apart from that, Edelweiss said that with this approval now behind and the merger process likely to be sped up, the stock could see anywhere between 30 to 40% gains in the next 7 to 12 months, Santo. So really, even if you're a tactical trader trying to take a position in Zee Entertainment, this could be a good time.
Well, this development, no doubt, CJ, I think it could be a short-term sentiment booster, but it's not something that comes out of the blue for Zee. And you've never seen the stock go back to the highs it made in last October when news first came out. And since then, it's been underperforming. And then you saw disappointing set of first quarter numbers also, which has again raised quite a bit of concerns. I think the market wants to see that there is a clear improvement in ad revenues going ahead. Besides that, the new tariff order, till it comes into effect, you won't see much impact on the subscription side as well, subscription sales as well. So at this point, I think the improvement in ad sales is the biggest trigger, and so far the market seems to be lacking in confidence there. At least that's what I'm going purely by the price action here. I
think, Santo, the price action going ahead will clearly be dependent on execution. I think there is the hope trade happened last year. I think that is now out of the way. Now it is all about execution and delivering on that hope for the company. And investors would be hoping that once the merger has gone through, the synergies start to kick in, you would see probably Zee Entertainment and the new merged entities earnings profile moving to a new territory. I think that would be a cue for me.
Well, Godrej Consumer, the next stock, now good second quarter update from the company there, and plenty of other positives as well. The India home care segment, that shown some bit of an improvement. That segment has been under pressure for a while. And besides that, you have other triggers such as easing raw material prices, which also was a big dampener. Now, at the start of the year, no one was giving much of a chance to this stock, given that there was management changes and all those things happening. But clearly, this has been one of the stock price has almost doubled so far. If you look from the bottom to peak level performance for this year. According to Goldman Sachs, Godrej Consumer is a good turnaround candidate, and it has flagged the fact that the Indonesian sales, they are finally showing some kinds of recovery. That's been a big weak chink in Godrej Consumer's armory. Besides that, the Africa sales have also done pretty well. The margins have been in double digits, mainly because of distribution initiatives, and it does seem like the stock could again surprise on the upside.
Well, Santo, I think a lot of the price move that we have seen in Godrej Consumer has been driven by the optimism, or maybe not even optimism. I think the exuberance that has been surrounded the appointment of the new CEO, the HUL pedigree. Everybody thinks that, if you get an ex-HUL guy, definitely your business is going to turn around and become the next HUL.
And there are signs, no? It's not
I don't know if there are, I don't know if, Santo, if there are concrete signs yet. I mean, it's been almost a year, that he has been on the job, and I think
the price says it all, CJ.
Santo, sometimes price can move ahead of fundamentals. Of course, investors will hope and the market will hope that the price performance is indicative of future performance, but if the future performance does not match up, it can always create issues. I'll get back to Godrej Consumer, Santo, but before that, let's quickly take a look at the market. Well, and it seems like a very strong opening for us, almost 110-point gap up.
It's a strong opening, and again, strength in the mid-cap and small-cap segment there. NSE advances about 1,800 stocks up and just 200 stocks down at this point in time. Nifty mid-cap up close to 1%. Nifty Bank is up about 1%. Sensex is up close to about 500 points. So a very rollicking start there, I would say.
Yes, Santo, I think if you look at the small cap space also, the Nifty small cap index higher by about 0.7%. The India VIX again down almost 8.5% at this point of time in morning trade. So clearly looking quite strong, and sectorally almost all the sectors are right now in the green territory, with the Nifty Auto, Nifty Media and Nifty Metal leading the pack of gainers at this point of time. So now coming back to Godrej, if you look at the update for Q2, the management has indicated that with the normal monsoon, demand in the second half probably from the rural market will be very strong. But we both know that monsoon, though has been normal on the surface, under the surface it has been a very erratic monsoon because of the geographical distribution of rainfall. Some areas have got too less of it, some areas have got too much of it, and therefore I think that could be a little bit of a dampener as far as rural revival is concerned. Apart from that, the India home care business, the volume growth there was only mid-single digit. Even in a period like this, when pent-up demand has been so strong, and when other competitors have been actually reporting better volumes. So for me, that also is a bit of a dampener as far as earnings are concerned. And Goldman Sachs says that Indonesia business is doing well, but if you look at the Q2 update, they have actually seen a decline in performance there in the Indonesia business. And with the currency headwinds that are already there, I think that could probably play a dampener, even if the business on the surface might be seeing some recovery post-COVID. Well, the last stock on my radar today is from the automobile space, and that is Tata Motors. Now, this is purely a technical pick, guys, and this is largely because recently there are signs that Tata Motors is taking support around that rupees 390 level, which is also a trend line support, a long-term trend line support for the stock. Now, the view here is that largely whenever the stock has reached this sort of a support level, it has tended to give a very, very strong pullback from the current levels. Also, Prabhudas Leeladhar feels that the RSI chart also is looking very, very favorable and is portending probably very, very good gains going ahead, given that it has seen a trend reversal in recent sessions. The brokerage firm is expecting anywhere around 11.5 to 12% gains in the coming days. So all the short-term traders out there ought to keep an eye out on Tata Motors.
Well, whatever the technical part of it indicates, if you look at from a fundamental point of view, the stock clearly has still some way to go, I would say. It needs to, this is something I've been saying in the past also. Till there's visible earnings improvement, you're not going to see the big up move come, the kind of move which you saw between March 2020 all the way till about mid of 2021. That kind of a powerful up move, which with the market re-rated the stock because of an improvement in its passenger car division mainly, and also improving outlook on the commercial vehicle segment. Now, those are still intact, but I think at this point the bigger worry seems to be the performance of the JLR segment, and that is where I think that could limit upside in the stocks.
I think fingers crossed, and Santo JLR also will start delivering on the
I know you've been a cheerleader for this stock for quite some time now. Last stock on my watch list is Mahindra Livespace, again a surprise outperformer in the real estate segment. You've not been hearing much about it. Motilal Oswal has now initiated coverage on the stock, and Motilal Oswal is quite impressed by the track record of the company over the last 3 years. It's signed about 9 million square feet worth of projects, and with revenue potential of close to about 80 billion rupees over the next 3 years. Now, the company has given a guidance, pre-sale guidance of about 2,500 crore rupees by FY24, which does on the face of it look a little bit ambitious, but Motilal Oswal is confident that the company will be able to achieve that guidance, and it's seeing traction both in its residential segment as well as in its commercial segment. So this is one stock to keep an eye out for.
Well, clearly, Santo, I think real estate space in general is doing quite well, and even though the stock price performance may not be reflecting it for the sector at this point of time, I think generally the trends are quite good. So therefore, I don't have much to say as far as the fundamentals are concerned, but technically I think the stock is not looking very impressive or encouraging, Santo. If you look at most of the technical indicators, they are at this point of time exhibiting a little bit of weakness for the stock. If you look at a momentum indicator like RSI, that is sitting somewhere in the 45 to 48 range, which is generally a very neutral sort of a trend for the stock. So I think going ahead with the stock now below its pivot price of rupees 475 and the RSI in a neutral zone, I would probably want to wait it out and see if an uptrend emerges from here on.
Give it a break, CJ. The stock has almost doubled so far this year. So
that
some
is
bit
true,
of
that
profit
is true,
making.
but sometimes, yeah, right. That is my point. That in the short term, you could see this profit booking trend continue, and probably maybe towards the end, after the earnings season, if the earnings are quite spectacular, then you could see another leg up of buying in the stock going ahead. Well, that's a Santo. Before we move on, one of our viewer actually, and this is a very interesting question. His question is basically, I think, related to the defense space, the one space that you have been quite bullish on. But his question is largely that whether we should go with MTAR Tech, one of the stocks that I've been bullish on, or Cochin Shipyard, one of the stocks that you have been bullish on?
Well, see, with defense, I think what we have seen in general, I would feel, is that the run-up has been really spectacular. Almost most of the positives now seem to be pricing in,
Yeah.
and the big gains that you made over the last 6 or 8 months, that is now unlikely to be replicated. I would say the near to medium term outlook on the sector is positive, since more production is going to shift locally and imports are going to come down.
Yeah.
So broader picture is that yes, the outlook is positive, but if you were to look at it purely from stock price returns, I think one needs to be a little cautious here on. That's
Yeah,
how
I think,
would-
Santo, clearly there is a case for profit booking in the defense space, given the spectacular one-way move we have seen. But for me, I think entire, from a technology point of view, stands to be, a little bit more in terms of the growth upside that is there, because although MTAR is trying to get into defense, and defense is around, I think, 10 to 15% of revenues, I think the fact that they're into the aerospace and space technology space, I think that is something that really makes MTAR stand out for me. And this will be probably one stock to watch out going ahead. So, funny PG, we hope that we have answered your question. And I think on that note, we can wrap up the show, Santo.
Well, that's with that, it's a wrap. And please do post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.